Doubling your mortgage production isn't as hard as it sounds like. And in many cases, it's not about doing more, it's about getting more out of the things that you are already doing. Hey, I'm DJ Christofferson, been a licensed loan officer since the end of 2009. I've helped build a mortgage company by multiple billions of annual volume, been a top 0.5% producer, and right now I focus on helping loan officers and branch managers build mortgage careers that they love. All right, so let's talk about this doubling of production. And so most people think that, hey, if I want to double what I'm doing, I need to double my activities. And in some cases that works. However, there's another way that you can go about it, which is quicker and easier and is actually more scalable. And that's getting more out of the things that you are already doing. Now, the unfortunate thing is many companies that loan officers work for do not provide the type of environment that allows them to quickly double their business. And when loan officers come to our company, they quickly find that they are able to double, triple, or sometimes even more their production within 90 days. And how are they able to do that? Well, let's first talk about what they are able to do when it comes to interest rates. A big reason why loan officers are not growing at the way that they want to grow, or their production is not where they want it to be, is because they lose deals due to their company's interest rates. Now, every loan officer is a bit different, and you could say, well, I don't sell interest rates, I sell service. Great, you still lose some deals due to your interest rates. And what would your production and what would your income look like if you did not lose those deals? With our company, and you can watch the video where you go more in depth when it comes to interest rates, is that loan officers, when they go from one company and they come to our company, they're finding that they are winning the deals that they were previously losing at the company they were at. And they're also finding out they're getting paid a lot higher basis points on those same deals with lower interest rates. So think about it for yourself. How many deals in the last 12 months have you lost due to your company's interest rates? Think about that. Now think about is if you were able to get those particular deals. Not only would you be able to get those deals, now you would have opportunities to get more referrals from those people that you close, but also the realtors that are associated, the buyer's agent, listing agent, you would have opportunities to get more of those deals. But since you lost them because of your interest rates, you lost those opportunities. Another big reason why loan officers double, triple, or more the production when they come to our company has to do with overlays, specifically lack of overlays. Now, a lot of loan officers say, well, we don't have any overlays. We don't have those things. Okay, are you sure? Could you close a 520 VA manual underwrite? Or is it pretty much impossible to do? I have closed many of those loans. Now, are those things that you're gonna do all day long? Of course not. But there are deals that you have lost due to your company's overlays when they tell you they don't have overlays, but they actually do. You think about every month, how many times have you lost a deal because of potential overlay? Or because your company was way too conservative on a deal than you think they should have been? Because we have almost 300 different lenders, and we have options with no overlays, those things that were denied become deals. And when they become deals, they also become future refinances, but also you're able to impress the realtors that are associated that you are able to get those deals done. All right, so we've talked about interest rates, gonna help you close more deals. Lack of overlays, you're gonna close more deals. Now let's talk about products. Because we have almost 300 different lenders, we have thousands upon thousands of products, and there are more products than I even know that we have. I'll tell you, I almost closed 300 loans in 2024, and a large reason for that was because of all the different ways we are able to do deals and all the different products we have. And these are not necessarily things you're gonna do all day long, but if you ever come across, let's say, a hard money loan, you can do hard money loans. And one of the great things about a hard money loan is that they usually turn into a refinance when they wanna pay off the hard money loan. Now, we have commercial loans, we have SBA loans, we have all these different types of ways that you can help somebody finance whatever it is that they need to finance. And why that's fantastic is because it's more closings. So those are three big reasons why loan officers, just by able to retain what they would have lost where they were at before. But let's go on the offensive. Those were some defensive strategies. Let's go on some offensive strategies on why you will double, triple, or more your production. And I'm gonna use one word, realtors. Okay, let's use some more than one word than realtors. Specifically, realtors will want to work with you. Because of our lower interest rates, because of our lack of overlays, because of our huge product mix, I can go to a realtor, which means you could go to a realtor and say, realtor, we are the largest mortgage broker in the country. We have more loan programs available, which means that if you were to refer me all your business, I can guarantee you will close more deals every single year because of the products that I have to offer. And realtors, they like money, they like closings. And if you can show them that they can make more money by working with you, you're gonna get their business. But we have more than that. We also have a couple unique realtor programs. One is called a RELO program, not relocation, RELO, real estate loan officer. Some realtors, they want to actually get their loan officer license, and we allow them to do that, and then they can make some additional revenues. Now, do you want to do that with all your realtors? No, but some of your key realtors that produce a lot, that might be an additional way that they can generate more revenue, and then you get them sticky to you. We have a BDM program with realtors, business development marketing, where they can actually make money by generating business. And so it's a little bit different where they can legally get paid on, I won't call it referrals, but they can legally get paid on their marketing services. We also could do joint ventures. So if you have a big producing realtor or you have a real estate company that you want to go after and they want to make additional revenues, we will set up a joint venture, a JV with them as well. So we have multiple ways for you to double, triple, and quadruple or more your business. We have the defensive strategies by just retaining the things that you would have lost at the company you're at, and then we have all these different offensive strategies. Our goal as a company is to provide you a setup or provide you a platform for you to build your business the way that you want so you can grow your production, you can grow your business, you can run your business with inside of our business. And if you want to talk more about these, there's a link around this video. Click it, fill out some information. My team will be in touch and set up a one-on-one Zoom with me.